Good afternoon, traders. This is Christian Fromhertz, Tribeca Trade Group, and it is Thursday, February 2nd. Sorry, not good afternoon, but almost good night because it's a little bit after 5 o'clock. So I wanted to do a quick video tonight. I did a video earlier, sent it out publicly. It was also on a Twitter space just shortly ago with the folks over at Ex Ante and Market Reader. So we just shared some bigger thoughts, but I want to just talk about today really quickly, and some of the moves that we saw, and just a lot of interesting things going on the tape. And of course, we've got both macro things going on. We've had central bank meetings. Yesterday was the Fed, today was the ECB, and then we've got all these earnings reports. The heavy hitters reported after the close today, and the quick reflection on that is, for some of the names that reported earnings. And of course, risk disclaimers in front of you. Everything that we're going through in these videos is always for education purposes only, not giving out any advice or recommendations. But, I find what's very interesting about this market is just how quickly things can change. And what I mean by that is just a couple of weeks ago, right, everybody was saying, like, in terms of analysts and so forth, that, oh my God, these earnings reports, they're going to be a disaster. Get ready for this market to really lower with, for the earnings recession. I think that's a term that I've heard being played. So, so what do we know so far since now we've had these big names? They kind of were, and of course there's more names that are going to report, but I think now the majority of names in the S&P are reported, not all, but a good portion of them. So what do we know so far? Well, I think that there's a lot of good results, and there's a lot of bad results too. And I think that's kind of that's what kind of makes a market, right? There's going to be some companies that don't execute very well, right? There's going to be other companies that are managing to weather the storm. So, the expectations, Meta had these great numbers, or better, much better than expected, and cost cutting and doing all the things that the analysts wanted them to do. And, the stock was rewarded, and it lifted just about every other company. So, if you were thinking you're going to come in, and you were going to put on a bunch of earnings trades thinking, hey, well, I think Amazon, from what you kind of looked at maybe in the beginning of the week, well, all of these names, they rallied so much into the print, and I talked about that in yesterday's video, how I went long Amazon, because I'm like, hey, the move is going to be made before, there's a good chance that the move is going to be made going into the earnings report. And if you look too, where's this thing trading after hours? It's trading at 108. Well, where was it yesterday? It was trading at 102. So it's, of course, that went up to 116, but, net the last couple days. And, that's what's kind of tough. And we were talking about that, in the last hour of the trading room. A couple of traders asked me, like, hey, well, what are you going to put any of these earnings trades on? And I'm like, I don't think I can. I think the move has been realized, right? And right, if you look at Google too, same story, right? Google was at 98 bucks. It's still up $2, even though it's selling off here. But, if you look at, what we took out here, I mean, look at today, Google was up 7% and they didn't even report anything. So, number one, that's the concept sometimes in trading, is sometimes it's just buy the rumor and sell the news. And, for Google to go up at 7%, if you were long today, that's a gimme. Right, we talk about that all the time. The expression, bird in the hand is worth two in the bush. Right, just take the money and put it in you don't have to deal with the uncertain event. And I get it. Some people, they like to bet on things, like they like to bet on football games because it's fun. Right, there's nothing wrong with that. You're betting a little bit of money on a football game. But if you're betting on earnings, right, and with real money, and a name goes up 7% into the earnings, right? That's not a good trade to think that it's going to go up another 7%. When that's right around, I think, the implied move for the stock. So again, this concept comes about in trading all the time, right? You take what's certain and you put it in your pocket versus trying to mess with the unknown. right? And that's the difference between sometimes between, a profitable trader and a not so profitable trading. And that's why trading is very difficult, right? It's very easy to get caught up in the euphoria, and you want to, so many times you want to win and you want to be right about a quarter, or and that could be on the downside as well. But a lot of times traders just, they don't put the money in their pocket when you've got something like a gift like that, right? So and that's the same thing. And I'm just using Google as an example, but you could look at the Qs today, right? Any name that you were long in growth probably had a pretty decent day. There's not sorry, I shouldn't say any name, because there are certain names that reported earnings, and not every name was up in the Qs today, but a good portion of them, up 3.6% today is a colossal move. All right. Also, something else here was that in the S&P, right, with, I see this every single day on Twitter. Everybody seems to be trying to call like the top, every single day. And I don't want to do that in this video. But we did, but I say but because we did take out a level that I was watching, which is that version point of control that's using volume at price. And, that is a level to be taking money off the table. And that's exactly what I did today. But yes, it doesn't mean, and it's the same thing when we got to the 200-day moving average. Everybody was saying, oh my God, this is it, right? This is it. We're at the 200-day moving average. And then someone will draw a new trend line. Every single day I've heard, this is it. This is it, right? So, I mean, that's not good analysis to say every day that like the sky is going to fall. So I wanted to mention that too, because that's just not good analysis. But, are there times where you should be taking profits? Sure. When the Qs are up 3%, right? And the VIX was up today too, right? So I want to talk about that for just a second, right? There's a lot of questions, tons of questions about that. What does it mean when the VIX is up and the market is up? Well, normally what happens, the reason why the VIX goes up is because volatility is increasing. And it doesn't discriminate between an up or down move. And you have to ask yourself, were we moving fast today or slow, right? I would think that we moved pretty damn fast today, right? Again, the VIX is just for the S&P, but you can kind of extrapolate and say the Qs were up 3.6% today. That is a very fast, aggressive move. So yes, the VIX is going to go up when it's moving that. Again, it's rare. It doesn't happen a lot, but it does happen from time to time where the market moves fast to the upside, right? It's usually, you hear the expression all the time, stairs up, elevator down, because that's usually the way it works. Well, today it was actually elevator up. Now, can you say, now I mentioned that that's rare and it doesn't happen a lot. So yes, you can kind of look at that and say, well, that's not normal. And that is a bit of a divergence to see the VIX and the S&P up. So that could be that's a signal for you to be like, okay, that sticks out like a sore thumb. Maybe I want to be, ringing the register a little bit more. So that's what I did today. I always share what I do, and I'll show you my trading blotter. All right, so yeah, so there's the Amazon trade. That's the first trade of the day, and I took that off very close. And again, you could see Amazon, for example, it hit these upside targets, right? It came very close to that 114 VPOC. It didn't take it out perfectly, but it did take out that version point of control as well on the 1 hour chart, right? So that's it's an upside target realized, right? So that's what I decided to do. And I think I got out of it. I didn't even get the high point of it. I got 112, which is fine to me. I traded a couple things. I day traded a couple momentum names. I'm certainly not going to own, some of these names that are in downtrends for more than a day trade. But if it has momentum for the day, days like this, you could day trade to your heart's content. But I'm certainly not going to put on a name for a swing trade that's in a downtrend. But if it's got momentum, it's got momentum to it. But I took profits in a lot of things that I didn't have to. I took Applied Materials off pretty quickly. That was a trade that I just added yesterday. So again, this is fast moving trades. Sometimes I'm putting on a trade yesterday and I'm getting out of it today. It's just because the market is moving so fast. Normally I like to let keep swing trades on a little bit longer than that. But hey, if something's going to move as fast as it is the last couple days, you take it. CRDO is a nice trade. I still have that one on. Right. That one I think is going to be so it's a big difference. And I think I talked about this a little bit in the midday session, but this name was up 2.5%, right? But this is a name that I think is just doing something different, right? And I think and I'll kind of wrap up this this video right here with kind of the most important the most important point of this video is that out of earnings season, you are going to find some really special companies. That's the way it works, right? I've talked about this before I've given the example of AEHR, and people get mad at me on Twitter when I say this, but you can own the name after earnings, right? And people argued with me when I showed the chart. It was even when the stock was around $28, but the majority of the move that happened in AEHR is after the name reported earnings. Why is that? Well, because you're getting that new information that they did something special in their earnings quarter, and they are doing, they may be doing something special. And you could see the analysts, not the analysts, you could see the volume pick up. Right? Institutions begin to buy the company now that they understand that the company is executing very well. And once they hear about their future prospects, right, they're going to accumulate the stock after earnings, right? So we're going to see that a lot through some of these names that reported, right? So there's going to be, so I think some really good setups to kind of come from some of the reports that we've gotten so far. So, stay tuned. If you're a member of Tribeca Trade Group, you have a front row seat into us doing our analysis and finding those names and trying to capitalize on where the leaders are. Right. I only want to own leaders. I don't want to own, the names that are in downtrends. Right. It's a beautiful thing about being being a trader and being able to kind of, pick what you want to own and so forth. I don't know about you guys, but I would rather pick, the potential leaders going forward. Right, the strongest companies, right? And you could allocate your money to where you think that is in the market at any particular time, right? And that's what's so exciting, about trading and about doing what we do, is that nobody's putting a gun to your head and saying, hey, you've got to invest in this company, just because you saw calls on the tape or something like that, right? You could allocate to for me, it's going to be allocating to new market leadership. All right, guys, have a great night. See you tomorrow.